you guys an update. My favorite day of the week is Mondays, and here's why because I am on a high level real estate call. So every week we're talking about things that may have just happened in the marketplace with interest rates, with the Fed's meeting. Recently, the Feds met last week, and we actually are the lower on our interest rates than we actually expected to be. So just 2 weeks ago, in fact, 2 weeks ago, we were at 6.8 with the interest rates for the housing market. And now today, we are at 6.4. So, what does that mean as far as interest rates go, right? Well, when you drop your interest rate down from 6.8 to 6.4, it actually decreases your monthly mortgage payment by about $120. So I believe when Powell was giving his lecture last week that he was just really, really itching to give the American population that we most likely will have another rate drop this year. So that's good news coming from the Feds and helping us to, give us a little bit more buying power, even though the prices are higher than they've been in a very long time. The affordability of that with the interest rates going down maybe just a little bit will help out for first time home buyers and move up buyers, and also create maybe a market for our younger population who wants to start investing and building their generational wealth with their first home. I'm hoping to introduce to my clients with the Westbrook Realty Group. We're looking at how do we invest in property as your number one property being your first rental. Like, how do we create a legacy of real estate, of assets within your lifetime that can be operating for you, and in turn building you financial wealth within the real estate world, so that when it's appropriate for you to take the next steps in life, not only have you gotten and secured a mortgage with a lender and own a piece of real estate. Now you can take that piece of real estate and you can actually use it to be your own bank, or use it for a home equity line of credit, or even use it to keep operating and use it as another additional income coming into your family, to your life, and eventually even use that 20% equity to upgrade to the next home. So if you're a Westbrook Realty Group client, you know that I set you up for success because we talk about these major factors that you get to utilize having a home. I mean, when you have a home, when you have a piece of real estate, it is a tool, it is a vehicle to get you to one place to another with your dreams, with your realities. You can utilize it as an asset to bump you up into the next area, the next stage of being an adult, really, right? So anyway, so I wanted to introduce you guys to something. A lot of the times I get asked, I get text messages quite frequently of people asking me, hey, my kids are buying a house. I'm getting ready to do this. What's the market doing? What's the market doing right now? That's a great question. But right now the market is really strong for the sellers. I mean, it depends on where you're at and what area. Specifically, I wanted to show you a chart that helps break down what real estate professionals may know a little bit more than the consumer. If you're familiar with months of inventory, that's a term that real estate professionals use sort of in their day-to-day life when they're talking, in a group setting. Let's say, for instance, the real estate professionals in an office get together, the broker gets up there, they talk about, hey guys, we're moving towards a seller's market. Hey guys, we're moving towards a buyer's market, right? So there's always going to be a market shift that's happening in real estate. So there's also this thing called months of inventory. Did you know that 6 months of inventory equal a normal market? Okay. So a normal market is 6 months of inventory. What does that also yield? 6 months of inventory also yields on the market. So when you're on the market for 100 to 200 days on the market, it can seem like you're never going to sell the home that you have listed, right? It can seem painful because along with showing your property, there's this thing called showing appointments. And if you have to advertise your home with a realtor, your other realtors are going to want to walk the home with the family to see if they can envision what it is that they're doing, right? So that's a pretty painful situation to be in, but thank goodness we're not there. But I just want to educate you on that term. So a buyer or seller's market. Now, this is what this chart I create for my clients when I sit down with them to list their property. We're looking at where we're at in a market. Now, I've got two properties that are about to, actually three properties that are about to go live in the Hopkins County area. So I thought, well, why not let's just look at Hopkins County specifically as a example, okay? So today's August 5th. We had the market dropped quite a bit today, right? I mean, we may all end up looking at this day as a history lesson, as I just heard on the news. I hope not, but we are in an election year, so you never know. But today's August 5th, and in Hopkins County, how did I determine if we're in a seller's market or a buyer's market? Remember what I said. A normal market is right here. I'm backwards. Sorry about that. A normal market yields you 6 months of inventory, which also looks like 100 to 200 days on the market, depending on what area you're in. Sulphur Springs is less than 20,000 population, so you don't have a huge population looking for, the move up buyer or the move in buyer or, usually in Hopkins County, you probably have more sellers and buyers participating in the popular months, such as the spring and summer, and then it probably settles down. But currently, right now, with Hopkins County, using them as an example, I'm at a 2.5. I'm right here. I am at 2.5 months of inventory. So when you're around the 2.5 months of inventory, that yields you a seller's market. So when you have a seller's market, the sellers are really the ones who, the ball's in their court, if you will. The sellers have the opportunity to list their property for the price that they want. And if the property, in my opinion, is on a scale of 1 to 10 in the HG7 plus, then your property is going to go quickly and may even have an opportunity to have a multiple offer situation. Now, I need to point this out because I forgot to mention this. When I do my buyer seller's market sheet, I do tend to use this is just because most of the time I'm representing families who are moving up and down. But my stats, when I'm using a buyer or seller's market, I make sure that my criteria in which I'm pulling to give me those numbers is a 3-bedroom minimum, 2-bathroom minimum, 1,700 square feet minimum and higher. And it must be a single family home. So I'm excluding condos, I'm excluding 2 bathrooms, I'm excluding anything younger or I'm sorry, smaller than 1,700 square feet, just because I want to make sure that my number is always fair with what it is that I'm gathering. So just to let you know, a normal market would be 6%. I mean, I'm sorry, 6 months, but we are right here in the Hopkins County area. We're right at a 2.5 months of inventory. So that's just educational news for you. So the cool thing about Mondays, absolutely love them. I'm on a high level real estate phone call, and we're talking about GDP, unemployment. We're talking about inflation. We're talking about interest rates. We're talking about what's projected to happen in the near future. The conversation that we were talking just about 2 months ago, I believe right after the May, I think the feds met in, gosh, was it May that they met? I think the feds met in May, and we did not see any inclination or any indication that they were going to lower the rates, right? We did not see any acknowledgement that they were going to lower the rates. However, after the meeting last week, what was determined was this. The unemployment was unexpected. The unemployment rate went from 4.1, and actually jumped up to 4.3. They were hoping for 4.2%, but they actually increased 4.3%. Um, One of the most distressed states in the union right now, as far as financially speaking goes, is Texas. Believe it or not, people are living paycheck to paycheck right now. And the housing budget that you used to have just 5 years ago used to be 30% of one's income, monthly income, would be going or allotted to your housing, your income, right? Now we're at 60% of one person's income going to housing. So that rate's almost doubled, and it's really ridiculous. But they're talking about $13.8 trillion in mortgage debt. But here's what they're not talking about. They're not talking about the $17.6 trillion in equity. Like, there's $17.6 trillion in equity that people are not talking about. So that's great information, because if you have a home that you're, maybe you've got tenants and toilets and you're ready to, eliminate that property or streamline your life or take the equity out of your home, now would be a great time to move an inventory, to move a home that you're just not simply wanting to manage anymore as far as a rental goes. Now, there are a few, let's see. I've got a cougher in the background. I'm sure y'all can hear that like crazy. Hopefully not. 6.8% last week is where we were on our mortgage rates. Now we're down to 6.4, which is good. We're slowly coming down. But you guys, just from 2021 to 2024, with where we're at right now, we were up $2.1 billion when it came to savings as a whole. And today, that number in just 3 short years has dropped to negative 7.2 billion in calculated savings. So to me, that's a really scary number, especially that we have 60% of 1 month's inventory going to the mortgage and the rental side. Those rates are just really, really scary. So I just want to encourage you that real estate is always a great place to put your money and to invest into a business. Utilize it and take all of your tax credits out. If you wanted to start an LLC, if you've got a child that's getting ready to go off to college, parents, I want to encourage you, a smart investment would be to buy a single family home in the college town and allow your child to be the recruiter for the roommates, and you turn that real estate into a money-making tool for you and your family. And then in just 4 or 5 short years, you can turn around and sell that and capture your equity out of it, and use that money in the future to whatever you're looking to do, to reinvest it, right? So anyways, I just wanted to get in a habit on Mondays to come to you live and to share a market update with you, to give you an insight on what it is that I'm doing behind the computer daily. I'm always got my nose to the grindstone, looking at comps, looking at real estate, trying to understand, recon. We get a lot of our information from Texas A&M University with the recon newsletter. I love looking at that. It gives me an idea of where the growth is happening in Texas and where it's evolving and what's to come. It gives me information on commercial real estate, land development, where these big purchase and acquisitions are taking place. So I'm going to do my best to come to you weekly with this information, and I appreciate it if you let me bombard your little afternoon, and I hope that you got some value out of this. If you have any questions, you're always free to reach out to me on my YouTube channel at I forgot my YouTube channel. I think it's Selling Dallas Real Estate, and then again on my Westbrook Realty Group channel in Facebook. So see you soon.